Good day, Junior Tikkies. I'm Mrs. Brimacombe. We are going to look at the Gauteng Department of Education Provincial Examination Paper for November 2019. The reason why we're looking at 2019, there were no examination written in 2020 and 2021. So if we look at what is expected, you will be writing 2 papers. Each paper consists out of 150 marks and 2 hours. It is very important that you understand what goes into paper 1 and what goes into paper 2. Starting now with paper 1. Remember, you've got 2 hours for all the questions. So make sure that when you start the paper, that you look at what is the time allocated for each question and ensure that you stick with those times. You don't want to end up spending too much time on a question and not finishing your paper. That will just be a waste of marks. You could have potentially gotten marks somewhere else, and now you got stuck with one question. Question 1. The topics of the question is on concepts and income statement. So if we look at 1.1, the concepts, indicate where each of the following items would be placed in the financial statements by choosing a term from the list below. Write only the answer next to the question number in your answer book. Now this is a non-negotiable. All of you should be getting full marks for this. You just need to make sure that you study your theory. If we look at 1.1.1, trade and other payables. Trade and other payables forms part of your current liabilities. This will be your note number 9 in your balance sheet or statement of financial position. Loss on sale of an asset is an expense, so it will appear in your income statement as operating expenses. Mortgage loan payable in 10 years is a non-current liability, so this will appear on the face of your balance sheet or statement of financial position. Trading stock surplus is an income, so this will appear in your income statement under operating income. Make sure that you understand income statement. Another word that we use for that is statement of comprehensive income. And if we look at balance sheet, it's statement of financial position. In question 1.2, you only required to prepare the income statement for the year ended 28th February 2019. So what we're going to do is we are going to first focus on the adjustment. In our next video, we are going to look at how to approach this question. Learners tend to battle with adjustments, so I'm going to spend time just focusing on the adjustments, completing them step by step. Before we look at, but how do we complete this in an exam? So starting with the adjustments. The first adjustment, on 27 February 2019, a debtor returned goods with a selling price of 4,500. The cost was 2,500. The credit note was issued, but this transaction has not yet been recorded. So they made this a little bit easier by providing the cost or providing the selling price. You didn't need to calculate anything in here. Make sure that you understand if they provide you with the markup percentage and they provide you with the cost, how do I calculate the selling price and vice versa? If they provide you with the selling price, how do I use the markup percentage to calculate the cost? So if we look now at this and we need to open up our T accounts, we're going to open up sales, debtors allowances, cost of sales, trading stock, and debtors control. Why? The selling price is recorded in debtors allowances and debtors control. The cost is shown in cost of sales and trading stock. Debtors allowances is closed off to the sales account. So starting with the opening balances and totals. Trading stock is an asset, so it will appear on the debit side. Debtors control is an asset, so the opening balance on the debit side. Sales is an income, total brought forward on the credit side. Debtors allowances regarded as an expense, so the total brought forward on the debit side. Cost of sales is regarded as an expense, so it will appear on the debit side. The debtor returned goods with a selling price of 4,500. This means that debtors control is going to be credited because they owe us less money. Now we just apply the double entry principle for every debit. For every credit, there's a debit. Debtors' allowances will be debited. Our expense will increase. If we're looking at the cost, we got the trading stock back. This means our assets will increase. Trading stock is debited and cost of sales is credited. Our expense will decrease. At the end of the accounting period, all our income and expenses is closed off. Debtors allowances is closed off to sales, so sales is going to be debited and debtors allowances credited. Sales will then be closed off to the trading account, and this is the amount that will appear in our income statement. Cost of sales is closed off to the trading account, so this is the amount that will appear in our income statement. Remember, in grade 11, you've learned provision for bad debts adjustment, and this is calculated on the book debt. Your book debt is the balance of the debtors control. With trading stock, we need to calculate a surplus or a deficit, so we need to make sure that we record all the transactions related to trading stock. So the second adjustment says on 28th February 2019, the physical stock count revealed the following. A common mistake. We compare the physical stock count with the balance from the pre-adjustment trial balance, and we do not take into account the adjustments that took place in between. Make sure that you take all the adjustments into account. What is your new updated balance? That must be compared with the physical stock count. So if we look at our new updated balance, our trading stock shows a balance of 70,500. This is compared to the physical stock count. Take note, according to my books, I've got more stock left over than what we physically counted. This means that there's a deficit of 4,100. Trading stock deficit is an expense which will be debited with 4,100. This is closed off to the profit and loss account, which means this will appear in your income statement as your final figure. If we look at packing materials, we have a total brought forward, 8,305. Whatever is left over must be subtracted and taken to consumables on hand, which is an asset. When we balance our packing material and we close it off to the profit and loss account, this is our expense for this accounting period. The third adjustment. The tenant has paid the rent up to 31 March 2019. The rent was increased by 10% from June 2018. So this makes it a little bit more challenging because I cannot take this figure and just divide it to get the amount per month. But divide it by how much? The tenant paid the rent up to 31 March. Our accounting period ends 28 February 2019. This means 1 month was received in advance. So we cannot take 42,000 and divide it by 13 because the rent increased on the 1st of June. Now there's two methods to get to exactly the same answer. Use whichever method works for you. Starting with method 1, we are going to say for 3 months the rent was at 100%. For 10 months, it was at 110%. So now, what do we want to calculate? We want to find out what was the amount that we've received in advance, which is after the increase. That's why we're going to say times 110 divided by 1,400. If you add those two up together, it equals 1,400. This will provide us with the monthly rent after the increase. Method number 2 is using X. When we use X, this will provide us with the amount before the increase. So to get X alone, we have to take 42,000 divided by 14. So the monthly rent was 3,000 before the increase. After the 10% increase, it is 3,300. So again, it gives us exactly the same answer. Use whatever method works for you. To show this now, what is going to happen with our rent income? We have a total brought forward, 42,000. This is equivalent to 13 months. 1 month must be taken out because this was income received in advance, 3,300. If we take the credit side minus the debit side, this equals our total income for this accounting period. Adjustment number 4, provision for bad debts must be reduced by 400. So here they basically said to you, we must make it less. And as soon as we make it less, as soon as we reduce it, then provision for bad debts adjustment is regarded as an income. Remember, as soon as you need to increase the provision for bad debts, that is an expense. When you need to reduce it, that is an income. So provision for bad debts is a negative asset. The balance brought down appears on the credit side. This must be reduced by 400. Provision for bad debts adjustment will be credited. It's an income and will be closed off to the profit and loss account. This will appear in your income statement under your operating income. So in this exam, the provision for bad debts wasn't calculated on your book date. They just provided you with the amount and said you need to reduce it by 400. Adjustment number 5, insurance includes a premium of 2,800 paid for the period 1 November 2018 to 30 June 2019. You should realize immediately your accounting period ends 28 February 2019. So this means this is a prepaid expense. But now you just need to be careful. Don't just assume that it's for 12 months. The 1st of November until 30 June is a total of 8 months. 4 months should be included, which means 4 months should be excluded. So to calculate this, we're going to start with the total brought forward from the pre-adjustment trial balance, which is 9,800. Included into that total is an amount 2,800. So 2,800 times 4 divided by 8 means 1,400 must be taken out, where to prepaid expense. If we take the debit minus the credit, this is our total expense for this accounting period. Adjustment number 6, Mukhali was omitted in the salaries journal for 28 February 2019. Omitted means left out. Net salary, question mark. Pension fund deduction was given, employee's contribution was given, gross salary, question mark. Note, the pension fund deduction of 8% is deducted from the gross salary. So this means that I need to use this 8% and I need to use the pension fund deduction to find out what is the gross salary. Starting with the opening totals that was given from the pre-adjustment trial balance. Salaries and wages is an expense, and employees' contribution is an expense, so the total brought forward will appear on the debit side. Now, if this was omitted from the salaries journal, it means it must be added to our expense. To find out the gross salary, we are going to take 960 times 100 divided by 8 to get the gross salary. This means that salaries and wages will be debited with 12,000. If we look at the employer's contribution, it's going to be debited with 320 because we need to add, it was omitted. Salaries and wages is closed off to the profit and loss account, so this is our total expense for this accounting period. Employees' contribution is an expense, it's closed off to the profit and loss account, so this is our total expense. I do not care about the deductions. If they've only asked you to complete the income statement, we only care about the gross plus the contribution. The deduction will go to the fund account, which is a liability. If we look at now adjustment number 7, received a loan statement from the bank, balance on the 1st of March 2018, 260,000, capitalized interest, question mark. This means interest is added to the loan account, so it's capitalized. Repayments during the year including interest was 80,000, balance on the 28th of February, 205,000. If you look at the pre-adjustment trial balance, there's a figure of 180,000. So this is an adjustment that learners often battles with. So how can I solve that interest? If we open up a T account and we start with the information which is given, the opening balance is 260,000. The repayment was 80,000, which means it will appear on the debit side. Now, if you take 260,000 minus 80,000, that equals the amount from the pre-adjustment trial balance. So what is not included in here is the interest. They have not taken the interest into account yet. So if we look at the balance at the end was 205,000, take the debit side minus the credit side, that equals the interest of 25,000. If you're doing it without the T account, you basically need to work your way from the bottom to the top. So this means it's opposite calculations. 205,000 plus 80,000 minus the balance in the beginning, and you will get exactly the same answer. Interest on loan is an expense which will be debited. This is closed off to the profit and loss account and will appear in your income statement or statement of comprehensive income. Adjustment number 8, depreciation on tangible assets was 18,000 for the year. There were no calculation in here. You just need to show the depreciation is an expense which will be debited. Now they said tangible assets, so this is why my details is accumulated depreciation. I don't know if it was on equipment or vehicles. It's not relevant to the question. Remember, question 1.2 was income statement only. So we would show depreciation as part of our operating expenses. Next, adjustment number 9. Interest on fixed deposit for February 2019 was not recorded. Interest on fixed deposit is not capitalized. If we look at the information from the pre-adjustment trial balance, fixed deposit, they said 8% per annum. So they told us what is the interest rate as part of the information. That was my investment, 120,000. If interest is not capitalized, it means it's not added to the fixed deposit. When interest is then received monthly, bank will be debited. If interest is still outstanding at the end of the accounting period, then I cannot debit bank. Then accrued income will be debited. So to solve this, interest on fixed deposit is an income. The total brought forward is 8,800. 120,000 times 8% times 1/12 means 800 is still outstanding. So our total interest for this accounting period is 9,600. So now we have done looking at all the adjustments. Remember that in an exam, you won't have time to do the T accounts. You only need to open up which is relevant to the question. And you only use the T accounts if you are not sure. Should I plus or should I minus? So our next video is going to focus on how to complete this question as if you're sitting in your exam paper or in your exam venue completing your paper. Have a wonderful day.